side by side. So is this going to be the last hike from the Fed? And what are we going to see from Europe? Expectations of 50 basis points moves in Europe, 25 over in the US. By and large, for a week that's going to be dominated by a whole raft of economic data, central bank data. Today is actually the quiet start to it. We haven't really seen a huge amount. We've seen Spanish inflation. In actual fact, that moved higher, unfortunately. Whereas, of course, that's just one component within a wider Eurozone figure. So I wouldn't necessarily worry too much about that. We've also seen disappointment in terms of German GDP, the prelim figure coming in at minus 0.2%. That's below forecasts of flat or 0%. For the rest of the day, we don't really see much. We've got Japanese unemployment, industrial production, retail sales coming out later on in the evening, and we will be looking at the Japanese yen in anticipation of that. But certainly markets started off on the back foot as we entered a week that is fraught with potential volatility and uncertainty as we try to gauge exactly where the central banks go from here. Looking at the indices space, we've seen the FTSE 100 tracking lower recently, but it's come in towards a key support level and it hasn't broken it thus far. Let me just take it to the weekly first, actually, because you can see where that big area of support comes in. We've got the 76.90, which is the peak that we had here in January 2020. Above that, we do have another level back here as well, which is, I think it's 72.30, I believe. So you've got that sort of zone of support, of resistance turned into support, because you can also see that we found this 76.90 level as resistance once again in February 2022. So we've been tracking lower of late, but certainly whilst we did see further downside last week, we wouldn't necessarily say that the selling is picking up per se. In actual fact, it seems to be slowing down already. And that brings a question mark over whether we're actually going to be able to break through this zone of support. So below where we are at the moment, we have the previous low from last week, which was 77.11, and that 76.90 support level. We need to break through that zone for us to look for a wider pullback for this market. Of course, as we can see here on the daily time frame, we've got this up phase from sort of mid-October, peaking out here in the sort of back end of November, turning into December. Then we've got that next phase coming in sort of mid-December up into the peak that we saw in mid-January. We've been tracking lower since. But so this move lower essentially looks like a retracement of that latest move higher. So how far is this pullback going to go? Well, it really depends on whether we can break the 77.11, 76.90 mark to then point towards that next move towards the downside and deepen the sell-off that we've been seeing. Here's the 4-hour chart, and what we can see is we pulled back into that support level, and we're seeing the potential for a bullish engulfing candlestick formation at the moment, with price action currently higher than the opening point of the prior candle. Does that point towards this essentially being the support level that holds and we push higher once again? Well, you want to look out for the more recent swing highs, 77.86 being the first one, 78.11 being the second. If we break out from this short-term intraday trend of lower highs, it signals the potential for us to continue that wider bullish theme that has been dominated. Of course, we've got examples in the past where we pushed higher, we look like we're potentially topping out with the fact that we started breaking through support, but ultimately price action pretty much held up to form a sort of consolidation phase before we continued on that trend. Well, we've pulled back. You could say that this is to some extent a retracement of this move up here. So fib wise, we can also see that price action has also bottomed out as it stands at the 76.4 Fibonacci level, which is at 77.17. So a crucial area of support. At the moment, it does hold. So the question mark is whether we break through it or whether we ultimately see another move towards the upside once again. So look out for a breakthrough 77.86, 78.11 as an upside bullish signal towards the downside. We really need to break the 77.11, 76.90 to point towards a continuation and a wider pullback here for the UK FTSE 100. Continuing with that theme, this is the DAX, and the DAX has also been on a surge over the course of Q4 moving into this year. And the latest rebound that we've seen at the beginning of January has now given way to not necessarily a top, because when we started selling off, it looked like we could roll over in a meaningful manner. But last week ultimately saw us continuing what looks at the moment to be the consolidation phase. Now, given the fact that we've seen such a strong move towards the upside, you would expect that any sort of pullback would be potentially decent in size. Well, as it stands, we haven't really got that. We are consolidating, but there is a potential that we are going to roll over. And you can see here on the daily time frame, we are seeing some weakness, but I think it's the 4-hour chart that really gives us the better detail on this. So you can see here, this is the sort of bullish phase that we exhibited over the course of sort of January into the sort of midpoint of the month. We pulled back and crucially broke out from this shorter term intraday trend of lower highs. And so with the breakdown through sort of, your first one was 150.80, it signals the potential for us to rebound and then roll over once again. Now, have we respected the Fibonacci levels here? Well, we can see here that the 76.4 Fibonacci level thus far has provided very consistent resistance. You can see we tried to tick past it, didn't hold, and then time and time again we've tapped on this 76.4 Fibonacci level and started to roll over, as we are seeing at the moment. So there is a good chance that we have seen this market topped out with the bullish phase, the breakdown through support, the subsequent rebound being a retracement, which it looks to be given that respect of the 76.4 fib, and now we're heading lower. But certainly greater confidence that this does form some sort of near-term top and that we're going to see a wider pullback would come if we break down through your 149.06 support level, which is established here on the 19th of January. Until that happens, you could still say, well, look, if you look at the bottom end, we've got the potential for a sort of trend line support here, 100 period SMA and that ascending trend line. You could say that we'll continue to track higher. So that's still a possibility. And certainly with 149.06, that is the key line in the sand that we really need to see broken for us to really feel a little bit more confident that the bears are going to move back in charge for a period of time. And then looking at the NASDAQ by and large has been outperforming over the course of this period, continuing its gains, pushing through all the Fibonacci levels, so we can get rid of that now, and taking us up into your 122.58. That level is your sort of first swing high. And certainly if we break through that level, you're looking at a double bottom formation that if we were to utilize the neckline down to the bottom of that formation, you're looking at 1825. So the projected target would take us up through this 137.22 mark, which would be highly notable because ultimately, we've seen a short-term rebound. If we break through this resistance, you'd still be looking at the potential, because we didn't break into a new low here, you'd still be looking at a potential for a deeper retracement, but that upside target would potentially take us through that level. Nonetheless, we're getting a little bit ahead of ourselves here because the fact of the matter is we haven't broken your 122.58, and as things stand, we've respected it absolutely perfectly, and we're starting to head lower. You can see that we gapped lower at the beginning of this week, and we're continuing on that vein. The 4-hour chart shows you that as things stand, we're coming in towards this key support level, 119.59. That's your real short-term support level. Below that, we're going to be looking at 115.48 as the sort of more major swing low to be looking out for. But certainly if we break the 119.59, then we're looking for a sort of wider pullback and a potential retracement of this 115.48. But really, it depends. The same kind of thing, right? If you're looking at the DAX and thinking that could top out, well, that breakthrough support would give us greater confidence. It's the same kind of thing here. We could top out here, but ultimately, at the moment, things have been going relatively well for indices, and we haven't necessarily seen, beyond the fact that we've respected resistance, we haven't necessarily seen any signal to say that this market is rolling over. So certainly, as we take out any of these key intraday support levels, so you start to build greater confidence that this bullish phase is over and that the bears are going to get back in charge. And so we're waiting for some of those signals, and certainly aware of the fact that we have not seen them quite yet. Looking at the FX space, the US dollar has continued to remain subdued, by and large treading water as things stand. And that has provided some upside for the likes of euro dollar and alike, as we see the likes of Federal Reserve potentially drawing their rate hike phase to an end. The ECB don't necessarily have the same luxury. Inflation in Europe certainly significantly higher than the US, and we're expecting a 50 basis point move because they're somewhat behind the curve in terms of rate hikes. And if we look here in terms of the daily time frame, you can see that despite we've seen a couple of down days at the back end of last week, we're heading higher once again. And we can also see that recently we've been essentially trading within a sort of 9-month high. So we do continue to climb higher for euro dollar. In terms of the 4-hour chart, this is really what I want to focus on, because as long as this 4-hour chart continues to give us sort of bullish signals, then we're looking for continued upside. So, you can break it down in terms of why it might be doing what it's doing. But certainly the chart will give you all the information that you need. And as things stand, since this low that we had at 104.83, we've been gradually stepping upwards in a very clear trend here. So towards the downside, 108.35 is the key near-term support level. That's because we've seen it respected on Friday and we saw it respected on Tuesday. But I would hesitate to say that that's the level, if broken, that would point towards a reversal, because ultimately what we're looking at here is leg higher, swing low, the push higher, swing low, the push higher, swing low, and we haven't actually pushed higher to establish the swing low. Instead, we're sort of within this consolidation phase that essentially is a retracement of the rally from 107.66. So a breakthrough 107.66 turns things around somewhat and starts pointing towards a wider retracement coming into play. But until that happens, further upside does look likely. And if you look at the current candle, that looks to be the order of the day as we look to continue to push higher and potentially extend what we have been seeing recently with a move up through 109.27, providing us with that next move into your sort of 9-month, 10-month highs here for euro dollar. So 107.66, if broken, signals otherwise, but as things stand, things continue to look bullish for euro dollar. Then looking at cable, the daily time frame shows you that we've been struggling somewhat at this 124.44 resistance level. That was established here in mid-December. And whilst we have seen a strong move in the beginning of this year, it's taken us up into that resistance level. And time again, we've struggled to break through that. Now, we're within touching distance of it once again. So, we could break through it here. But I would say if something keeps happening, expect it to potentially happen again. And when it doesn't, then you can play it from there. So we see up ahead 124.44. We're continuing over the near term here to create these sort of higher lows. So that's certainly worth noting. And if we break down through your near term support of 123.44, then it looks like we could come in for another pullback here. But it's a question of, do we break the 123.44? Do we break the 124.44? Whichever happens is going to tell us a lot about where we go from here. But certainly I wouldn't be looking for a long position right now, just off the basis of we're still below this resistance level. So I don't know if we're going to break it here. We might just continue to consolidate, maybe pull back a little bit once again. So some question marks, but by and large, we do have a bullish trend in play at the moment. And there is a good chance that we will break through the 124.44 level. When or if that happens, then we'll be able to just continue to play this trend and look for further upside for cable. And then finally, looking at dollar yen, daily time frame tells you a lot about what we have been doing recently and what we could be in for here. So the daily time frame shows you that essentially since mid-October, we have been trending lower. If you want to pick out some of these swing highs, you're going to say, well, we've got the peak, and then we've got all the way down all of these swing highs. So the more recent one of 131.58 is less pertinent, and the reason for that is we haven't sold off since then. So I like to say that's fully established as the swing high of no, once we've broken into the new low. We haven't done that on this occasion, so we could just be forming a deeper retracement of that move. But certainly as we look here, we're looking at a trend line resistance up ahead that is coming into play. We've got that 131.58. We've sort of struggled to really regain much more ground here. So I think there's a good chance. And if you look at the way that it's sold off in the past, we've seen strong days towards the downside. I think there's a good chance that if we see, say, the Federal Reserve come out and say, this is pretty much going to be it, and we're seeing Japanese inflation moving towards the upside and the Bank of Japan gradually changing their rhetoric towards being more hawkish, then it gives us more grounds for another move towards the downside for this market. So towards the upside, look out for 131.58, this descending trend line for us to potentially roll over once again. A breakthrough 134.77 is required to negate that bearish view that currently holds for dollar yen. Looking at the commodities space, certainly the US dollar has a significant role to play in many of these markets, now more so than the likes of gold. It has been weakening a little bit recently, certainly on the prospect of the potential move higher for the US dollar. that hasn't necessarily come to fruition. And so what we've been seeing here is consolidation for gold, but also consolidation for the US dollar. The 4-hour chart shows you a very clear trend here. So this has been a perfect trend. If you're looking at these swing lows, just time and time again, we're creating these higher lows. So perfect. Pull back, move higher, pull back, move higher, pull back, move higher. What are we doing currently? Well, we're set within this consolidation phase. 1911 is the near-term swing low. If we break through that level, then it starts pointing towards the bears potentially coming back into play. But as things stand, we're sort of consolidating within a very clear bullish trend. And so there is still a good chance that we do push onwards and upwards and maintain this bullish trajectory. Like I said, towards the downside, 1911, your first swing low to break for the bears to start coming back into play. Below that, 1896, the key level to be watching out for. And on energy markets, this is an interesting one. I mean, I would say that one of the interesting things to note is that we look at this monthly time frame and say, well, look at the way that last year ended in terms of that candle, certainly not particularly bearish and points towards a potential bottom here. And then you look at the way that this month looks like it could close out. Well, you could say that this retracement is soon to be over and we could push upwards. Well, we're not necessarily seeing that quite yet on the short term. We've broken through the 76.4 fib. We've also got this trend that's playing out. I think the daily shows it better. We've got this trend that's playing out here that has brought us back into this descending trend line and your 100-day SMA. So this is a potential area for this market to roll over once again. What we can see also is that we've seen the stochastics break below that 80 threshold. I would say that you should also note that it's starting to move somewhat sideways. So it's not necessarily just on a steep decline like we've seen previously. But nonetheless, if you look at the past 5 occasions that we've seen this signal, time and time again, each time that we've seen a breakout from overbought and rolling back through that 80 threshold, we've seen periods where this market has topped out, sometimes leading to a multi-week sell-off, sometimes leading to a somewhat shorter sell-off that maybe lasts a week. But each time we have seen that signal, it has provided a very good selling opportunity. Well, we've seen that signal once again here. We're at a key area of resistance. So there's a good chance we could see the bears come back into play here. But for me, greater confidence comes with that 83.97 swing low being broken. The 4-hour chart will show you exactly why it's so notable. Let's just get rid of this. So we've got these 2 levels of support down here. We've rallied. We've pulled back. We haven't broken into a new high. So potential double top here if we break the 85.49 and then 84.02 below that. If we break through this structure of support, I think there's a good chance that this market starts to head lower in a meaningful manner. That's it for today. If you want any more news and analysis, make sure to go onto the IG platform. Other than that, follow me on Twitter. My name's Josh Mahoney here at IG. Have a great day. Good luck trading. Thank you.